Have you missed it? Like, do you guys think, oh, I should have got in on Bitcoin?
I don't spend long
5 years ago.
Bitcoin.
Bitcoin is something that certainly a lot of people think, is going to rise as an alternative currency.
The Australian Bitcoin Podcast, presented by HardBlock.
It's not a currency, it's not money. I don't understand it.
G'day folks, welcome to the Australian Bitcoin Podcast, where we bring you the best of the Bitcoin signal from an underrepresented Mike Antipodean perspective. As always, I'm joined by my Australian Bitcoin Podcast co-host, Mike. Hello, mate.
Howdy. How we going?
And joining us today is one of Australia's foremost experts on what is surely one of the most nauseating topics ever. Sorry, Adam. Tax. Mr. Adam Ahmed. How are you, mate?
Yeah, going great, thanks. How are you guys?
Pretty good, thanks.
Yeah, pretty good, thanks. Welcome, everyone, to the Australian Bitcoin Podcast, episode 114, Expert Tax Tips from a Tax Tip Expert. We are recording this on the 11th of June, 2026. The price of Bitcoin, as it stands in Australian dollar dues right now, 89,380. We just ticked up from 76 to 80 as I was about to read that. We've just gone up to 85. We're ripping a little bit. About a 2.65% price appreciation in the last 24 hours. The last time we recorded this, Mike, the price was crashing down to around the levels that we are currently reading out at the moment. So I'm kind of, the minute chart wins, in my opinion. It always makes me feel a lot better. We're recording this at block height 953,190. The market cap, take note of this, in Australian dollar dues is 1.79 trillion. So we've had quite a crash out since we last spoke. Percentage issued to Bitcoin is 95.43. There is less than 5% of the $21 million, the 21 million coin hard cap. So it might make sense to get some. And the hash rate has been interesting too. I've been monitoring that over the last week. We're down at around 887 exahash currently, with an expected downward difficulty adjustment of over 10%, landing sometime around Sunday. Now, if you don't know what I'm talking about, money, mining, you can head over to learn.hardblock.com.au and find out and get your head around this Bitcoin thing. Okay, gentlemen, price action. Let's try and articulate our thoughts, our opinions. There's a lot of fear. There's a lot of fear, loathing, and distraction going on currently. Do you have any thoughts, Mike?
Yeah, I mean, it's a pretty horrific bear market at the moment that we're living through. We may be seeing a return to form of the 4-year cycle, maybe alive and well, based on the numbers that we've seen coming through. We haven't seen numbers this low since, I'm just looking at the chart, looks like October 2024 was when we last saw numbers around this amount. So yeah, it's kind of undone almost 2 years of better times. So it's a little bit grim out there, and we've seen a lot of sort of bearish things relating to why this has happened. It kind of coincided with, the downward spiral happened with October last year. Trump did his shenanigans, and then we've had Iran war since then. We had the big Bitcoin Vegas conference, which always wreaks havoc on the price. Then we had the Iran war, and it's just kind of been grim for a good 6 months now. And it's a bit tiresome. And if the 4-year cycle is true, then we may see it continue until about October. So again, no one knows what will really happen. You got to read your tea leaves a little bit and, get your lines out on your charts and work out what you want to work out. But yeah, if the 4-year cycle is true, it could be more pain until October.
It's pretty painful, I must admit. Like it is pretty painful. I read the other day that we're below 2021 highs, and then the 5-year CAGR is, or the compound annual growth rate is 12.5%, which is just beating inflation, depending on what numbers you use. But if we round it to around 10,000, we're kind of beating it roughly by 2.5%, which I guess is okay. I don't know. Adam, did you have any thoughts on the price action, ETF outflows, inflation worries, market obsession with AI and rocket ships?
I actually thought the price was doing quite well for a little bit. And then to me, it seemed like after Michael Saylor sold a tiny bit of Bitcoin, just a very small part of what they own, it seemed to really like depress the price. Like he seems to be very influential in the market, a bit like Trump is with oil, you know.
There's only 35 Bitcoin, right?
It was
32.
32, yeah,
32.
it's very small. I mean, 32 is a lot of Bitcoin for like an ordinary person,
Indeed.
but for
It
him,
just shows that like how emotional everyone is ultimately, even though it's, you know, it's hard money, it's based in code, it's based in rules, and yet we're just still ruled by emotion. And we see the, you know, what many people look up as a form of a savior or a hero archetype in Sailor. If he's pulling out, even just a tiny bit, and then he goes and buys another 1,000 a week later, it's the emotional damage.
he must really look at that, right? If you're him and you're like, okay, I want to buy obviously at the lowest price possible, I can sell like 30 and then the price will go down by like 20% or 30%, and then I can buy another 1,000. Why wouldn't, like, surely you'd be tempted by that.
Yep. Absolutely. And you do wonder like what is happening behind the scenes, because end of the day, if you're a big nation state or a big big corporate entity and you want to start accumulating, you don't want to be accumulating at the top of the market. You want fear and uncertainty and doubt to be reigning hard. You want retail to be fearful. You want the price to bottom out while you take a position in. You don't want to be taking a position while singing the praises of the asset. You want it to be pain and chaos and fear. And you take your position quietly in the background.
Yeah, that's right.
I did read that someone, I think it was, I just read a random post saying that the numbers look like private institutions are still quite bullish, like they are still taking positions. The fear has absolutely taken hold in retail. Your individual buyers and you know, end of the day, yes, there's lots of ETF outflows, but a lot of the buyers of the ETFs are still your retail types. Maybe they're a bit too scared to buy at spot and self-custody, but they are still retail that is just using the ETF channels. And so they're just as fearful as some of the other folks out there. And so if they're not buying, then obviously, they're just fearful. But there is some evidence that there are still big accumulators out there that are just quietly sloping the dip.
Well, that leads to the one possible solution, Mike, which is that, you're just going to have to go in and buy big and push the market back up.
That's it. I'll buy. Yeah, my $20 DCA is gonna. It's a drop in the bucket. It'll help.
Every little helps. That's what Tesco used to say. I mean, this is as much of a rotation trade as anything. I think. I know I'm no macro expert, but from what I've been reading, obviously with the imminent SpaceX IPO, which is scheduled for, I guess it'll be our Saturday, but it's the Friday in the US. And I think it's Friday morning when retail are allowed to begin buying. So most of the institutions will kind of place their bets by Thursday evening. And then by Friday morning, retail can sort of pile in. And the interesting thing, and the thing that's kind of blown my mind the last couple of days researching this, is the target valuation for SpaceX is $1.75 trillion, trillion with a T, which is about the same size as the current Bitcoin market cap when priced in Australian dollary dues. That's bonkers to me. I can't actually get my head around the $1 trillion valuation. Like, I used to throw this thing around when I was trying to convince people to buy Bitcoin back in the day, and would sort of shill orders of magnitude in and around what constitutes $1 million or $1 billion or $1 trillion. And $1 million is 12 days. If you spend $1 a second, you could spend $1 million within 12 days. If you spent $1 a second you could spend $1 billion in 31 years. You'd run out of money after 31 years. And if you spend $1 trillion at $1 per second, you would run out of money after 31,688 days. So 1.75 trillion is an extraordinary length of time.
It's a big number. I just looked up the biggest IPOs in history so far. So if SpaceX is going for their what'd you say, 1.2 trillion or something like that, what do you think is the biggest amount so far in a single IPO? It's Saudi Aramco, 25 billion. So we're going to go.
Biggest so far.
That's the biggest so far. Is supposedly, if Investopedia is correct, Saudi Aramco 25.6 billion. Alibaba was the second, 21.8 billion. And so we're going from, like, that just shows how like kind of silly things are getting, right? Like the numbers are just so fake at this point.
Well,
like that was 2019, so a mere 6 years ago, the biggest IPO ever, 25 billion, and now we're talking about $1 trillion IPO.
There is a way to make the number seem small, and that is that, let's say NASA is worth the same as SpaceX, and the US government decides to IPO NASA. They'll be able to pay off, what, 3 or 4% of their debt?
Yeah, okay.
Well, here's the other question. So if SpaceX is going to IPO for let's say they do $1 trillion, what do we think some of these AI companies are going to come out with? The the OpenAI and Anthropic, because they're doing their filings now as well. So you could see some other insane numbers with them. Google's just trying to raise $80 billion as well through another stock offering. So they're like, all these companies are just throwing some absolutely insane numbers out there. The market is so frothy. If you're in this very particular place in AI, SpaceX is obviously the exception. The idea being that, if we do end up becoming a multiplanetary society, and SpaceX is the driver for that, then yeah, maybe $1 trillion valuation is actually correct. But I can't help but just I'm the eternal skeptic. It's my moniker at this point. I just can't help but think that it is just another way to dump on retail. It's almost like it's almost like the inverse of Bitcoin. So with SpaceX, it's privately held, private equity, right up until this point. Suddenly they can IPO for some insane amount, and potentially, like, we have no idea what might happen, but suddenly retail can pile in, retail starts slurping up some stock, and then everyone starts getting out. The original private equity guys start getting out and making some sales and making bank. And then maybe the stock price tanks, and everyone in that retail bought in at this IPO gets shat on. It's kind of like
liquidity. Thanks for coming.
Exactly. And it's almost like maybe something, the opposite thing has happened with Bitcoin, because with Bitcoin during the biggest runs, back in 2019 and until, this latest downturn, was actually largely driven by retail. We didn't see institutional and major investors, major institutions and governments get in until like 2024. That was when it started being really, we were talking about the suits being here, the institutions are here. And, you can't help but now think that maybe they're doing some shenanigans to tank the price, scare off retail so that they can slurp it up at a price that they're more happy with. But then with this SpaceX IPO, it's the opposite, right? Retail has been kept out. Only private equity can pay to play. Up until this point, they get this insane valuation while retail's kept out. Suddenly they can pile in. Do we see the inverse happen, and we see retail just getting dumped on? Could happen.
Possible.
It seems entirely possible. I just wonder if this is kind of like the 2026 version of the dot-coms, in the early 2000s. Very few companies had very little revenue. They're making massive promises, sky-high valuations. We saw the same thing in 2007 with these mortgage-backed securities, with the people that are paid to hand out the AAA credit ratings were handing out dodgy AAA credit ratings. Bundles of debt sold as safe assets, blah, blah, blah. It's almost like the system itself incentivizes more debt, more liquidity, more growth, more belief, and it kind of rinses and repeats with a new shiny thing. It's like the new face of Fiat, this SpaceX IPO.
Yeah, and then they're going to do it again with AI. I'm still convinced that it's a bit of a bubble. The only counter to that is if one of them does actually come out and say, "Hey, no, we've cracked AGI, we've cracked quantum, we've cracked 0 point energy," and at that point, it kind of doesn't matter if everything kind of falls off and goes to zero, because in theory, then we have free, abundant energy for everyone. So at that point, we're in a different world. So
those people get taken out before we get free, abundant energy. But everyone knows that.
That's the doomerism take. That's my line. But yeah, end of the day, I think being a skeptical pessimist is still the right way to hang your hat at the moment. But just be ready. And if you do make any decisions, if you do decide you want to take a position in these IPOs, be duly warned. Do it with, it's a gamble. It's frankly a gamble. We don't know if there's going to be some just private equity just waiting to dump on retail. It's definitely what it smells like to me. But if they are sitting on any crazy announcements or crazy breakthroughs in space travel or in AGI or something, then then it would be a good bet. But that's kind of my point, is that it does feel like
to
a
afford
bet.
the bunker to hide in.
That's right.
When
Yeah.
Skynet goes gets online.
Yeah.
Adam, as an accountant, as a professional number cruncher, how do you make sense of these numbers? They just get bigger and bigger and bigger as it goes. I mean, the second, what is it, the most expensive or the second most expensive line item after Social Security in the US at the moment is the debt.
Yeah.
And it is just going parabolic effectively. How do you think through these numbers and square them? Or can you, can't you?
Yeah, there has to be something to it, because it does seem strange that we're reaching a point where the entire revenue that's collected goes to interest, and there's just nothing else left. It's bizarre, but look, when it comes to finances, and I've seen a lot of weird things over the years, but I think that one of the things that holds up the US economy is the lack of an alternative, really. I mean, where else are you going to go? If you have nowhere else to go, then like the place that's there tends to continue to be able to do what it's doing. Like
clean as dirty shirt.
Yeah, that's right. So that's the thing that to me is holding it up. But the other thing is who holds the debt, and sometimes they talk about the Fed putting the debt on its balance sheet and this and that, and that's basically like money printing. So essentially, what they're doing, I think, is saying we're going to print money, but like we don't want to acknowledge that we've printed money, so we're going to pretend it's debt that we're going to pay back. And that to me seems to be the situation. Like, otherwise, there's just no way you could get comfortable with that level of spend.
It's just these fake games, right? Where it's all about belief, and this, the debt is just a number. It's a number in a computer somewhere, and it's, for Australia, it's almost $1 trillion. For the US, it's $50 trillion. There's no real way that can be realistically paid off by supposedly the people of those nations that supposedly owe that debt back to someone. We're not really sure who, but someone. But the debt kind of represents almost like a control mechanism, or like a belief that because we need to keep working and we need to keep paying back service to that debt. So it is this, the word debt slavery gets thrown around a lot, but it kind of does fit the bill.
But I think that's not actually what it is, because this is something I actually, my wife pointed this out once, because then, sometimes you come across that client who's like borrowing ridiculous amounts of money at ridiculous rates. And there was one client I remember who was borrowing at like 50% interest. And I told my wife about it. She works here as well. And I said, I just don't understand why someone would borrow at that level, because you'd have to be earning more than 50%. Why are they so keen to in order to just pay it back and justify it? And then she said, like, no one cares what the rate is if you have no intention of paying it back.
Yep.
It's like a speeding ticket, right? It's legal for a price. You can't go that fast unless you want to pay for it. And
It might,
I mean,
but it might actually just be the case that they have no intention of paying it back. Like that actually
Yes.
could be the logic. I
it's the
mean,
big Hail Mary.
like they borrow money from
well,
China by saying to them, you know, you have to buy stuff from us or we'll buy stuff from you, whatever. But then you have to lend us the money back. But are we really going to give it back to you?
But that's where it comes back to the belief thing, right? It's like there's no intention to pay it back from the government's perspective. But if you, the individual citizen who decides that you don't want to be part of this game anymore and you refuse to pay up your tax dollars, which are going to go to servicing the interest on this debt, suddenly, oh, well, hang on, lock that guy up because he's not servicing this unsolvable debt problem. So put him in jail. So it's like it's this belief system where if you choose to opt out and no longer believe that we can ever pay back this debt, and you throw your hands up and go like, okay, we'll just throw it out, we're not going to pay it back. Suddenly you're in jail. Your life is forfeit. So it is this psychological trap that we have to keep running on this wheel, even though we're never going to get there. The mechanisms of the state keep you on that wheel.
It's way even more nefarious than that if you think about it, because when you're borrowing, obviously it's being paid by the future. And so what's happening is everyone who's working today is paying off interest, which is going to obviously some kind of banker or whoever who's just bilking all of the revenue. And then for the services that you need, that the government needs to provide, it's borrowing money, which means your kids are paying for it. So
Yep.
all that's happening is like you're working for the banker, and then your kids will be working for the banker, and so on and so forth.
And this is where I think
We're just
that
playing Monopoly at that point.
the numbers are going to start to get so ridiculous. Like they already are. The numbers are already quite ridiculous. $1 trillion in Australia, $50 trillion in the US. As DJ explained before, that $1 trillion figure is just so crazy. Like the human brain just can't really comprehend that number. And so I'm thinking that eventually the numbers are just going to become almost irrelevant in many ways. And the reason I think the system is going down this pathway is there's this article that I was reading about today. Maybe we'll link it in the show notes. We keep talking about this thing called Project Acacia, these different projects that the RBA, the Reserve Bank of Australia, is looking at around stablecoins, CBDCs, and tokenization of assets in Australia. And they're saying, okay, we're moving to stage 2 now. We're going to play some more games. We're going to do some more tests. And the one that they keep talking about, so in this article, the RBA Assistant Governor, Brad Jones, he's talking about bank deposit tokenization in relation to stablecoins and what's known as a wholesale CBDC. So they know that we plebs have kind of already made our decision. When we hear the word CBDC, central bank digital currency, we're like, no, keep that away from us. So they're being quite savvy and saying, well, no, we'll play with the CBDC at the wholesale level, so between the RBA and the banks and the various financial companies. But down at the pleb level, we are going to be tokenized. And so your bank deposit's going to be tokenized, your income will be tokenized, your house will be tokenized, your super will be tokenized, and it will appear on these ledgers of all these different financial institutions and traded like a commodity between you. And the numbers almost won't really matter. It just knows that you are an economic unit represented by these various tokens, and you have these assets represented by these various tokens. And it's kind of like traded as a lease on your time, like your time, your labor. You're an economic unit that is generating labor for this beast of a debt state, the Australian government, and you can move between financial entities and be traded internationally and all this sort of thing. And it's in service of this debt, which just becomes like the number is so big you can't comprehend it, but you have to keep playing the game, otherwise we'll take your tokens away.
I mean, the CBDC is interesting to me because I don't know how that squares with the way that the financial system currently works and extracts profits from the people who use it. Because once you have some sort of digital currency, it suggests that the currency is fixed at a certain level. But what actually happens in the financial markets is that sometimes like the money doesn't exist, and so that's like it's credit. So for example, okay, let's say let's say I run a bank, okay, and then Mike, you have a property and Daniel wants to buy the property from you, okay, and I have no money in my bank, okay, at all, but for some reason Daniel thinks that I do, so he comes up to me and he says, "Look, I need to buy this property from Mike. I need 500,000." I say, "Sure, no worries." I'm the only bank in town, so what I'll do is I'll say to Daniel, "Here's $500,000. I'll deposit it in Mike's account. Mike, you need the $500,000 to be deposited somewhere. Why not just deposit it with me?" So in my account now, I've got from zero, it still balances. I've got Daniel owes me $500,000 as a bank, but I owe Mike $500,000. Meanwhile, I'm charging Daniel interest, okay, at a higher rate, and I'm paying Mike a lower rate of interest. So I've done nothing, and I'm just collecting interest, and I've just created that credit and created that transaction. Now, if you have a central bank digital currency or some sort of digital currency, I don't know how you would do that. You know, like like with Bitcoin, you can see what's going on. It would have to be opaque or something, but I don't know how you maintain the opaque nature of money as it is now with credit,
Yes.
in order to do those and have a CBDC at the same time.
Yes, and that system breaks down when there's meaningful alternatives available, Bitcoin or US dollars even, compared to Australian dollars or an Australian CBDC. You'd rather have Bitcoin, gold, or US dollars, even though US dollars are still a Ponzi in itself. But that's why I think we need to be keeping a laser-eye focus on this tokenization idea, because I feel like in that scenario that you talked about before, that hypothetical of me selling a house to DJ, forget numbers, just there's a digital representation, a digital token of me, of DJ, of my house, and the bank has license from the government to move these tokens between us, still held on the ledgers of the regulated entities, and almost no real no currency is issued, no currency changes hands, only a reallocation of tokens and a debt associated with those tokens.
But there has to be a token then.
Holds them.
The thing is, there has to be a token in that example. Whereas in the example I gave, there doesn't have to be any tokens because I'm making the tokens. So like the existence of the token breaks the type of transaction that I just described from happening, because now there's actually a token. Like I'm the bank, I can't actually do the $500,000 loan because I don't have the 500,000 in tokens.
I think the idea is that the house is a token, and that is kind of moving from me to DJ. It's a digital token, moves from my account to DJ's account, and at the same time you slide onto his ledger a token representing the debt associated with that transfer of the house's value.
You're looking for a hassle-free way to buy Bitcoin in Australia? HardBlock makes it easy. As Australia's longest-running Bitcoin-only exchange, their mission is to help Australians simply and easily buy Bitcoin and take it into self-custody. There are no deposit or trading fees, just a clear 2.4% spread. That covers operating costs, so you always know exactly what you're paying. Withdrawals are just $1.18 or as low as 400 sats with AutoSend. There are no hidden charges, no surprises, just a fast, reliable, and easy way to stack sats with total transparency. Get started today at hardblock.com.au. Bitcoin made easy for Aussies.
But that means I would have to create a token each time I do that transaction. So you would see the increase in the money supply. See, the increase in the money supply when you do it through credit is hidden. Whereas, there's not more dollars in existence. Like banks don't have to have, they only have to have a certain amount of reserve capital. And so
it'd be balanced by the RBA, but then that kind of, the jig is up then, because it'll be obvious as if assuming it's a public ledger, we could then see
Correct.
exactly what they're doing, and so
That's right.
the jig would be up.
It'd have
So
to
it
be
really,
a private one, and you'd have to really hide it. But they're doing, which means you'd have to do what you're doing now. So you'd end up back to where you started.
We're talking about demons and criminals here, and I mean, I'm sure they'll find a way. So let's. I just wanted to quickly pivot because we've got Adam on, and it's actually an incredibly unique situation because Adam combines tax accounting and legal capability as a dual qualified solicitor, effectively, and a chartered accountant, and he's a Bitcoiner, which is awesome. So it would be remiss of us to not pick his brain. All of the conversation we've had up to this point is kind of feeding into the current macro environment, the narrative, the story of political parties on the rise and others in the bin, and so on and so forth. And I was reading this week that while we're still technically a wealthy country, there's a lot more Australians at the moment asking why it doesn't feel that way, and that we have, or we're at least told, that we're a first world country. And I've been saying it on this pod for months now. We're LARPing as a developed country, and yet we have real problems with housing. It's expensive. The roads are crowded. Hospitals are stretched. Energy infrastructure's under pressure. And basically a lot of people just feel like they're working harder just to stay in one place. And one stat that I read this week was that a lot of people feel worse off than they did back when they were locked in their homes for long stretches of time during the COVID epidemic, which is quite remarkable when you think about it. And obviously inflation is sort of biting and here to stay. Now, on top of all that, we have these ideas from the current government, particularly in and around capital gains and tax revolutions. It is a revolution, let's be honest, because they're communists. But this 50% CGT discount is being replaced by an inflation indexation and a 30% minimum tax from the 1st of July 2027. That's the proposal. It's getting a lot of pushback at the moment from the business community. Can you unpack this for us, Adam? What is this harebrained scheme? Is it going to work? Will it be pushed back on to the point where it'll be kicked in the bin, similar to the unrealized capital gains idea that they had earlier this year? Please help.
Well, I think just to begin with, conceptually, the way the tax law works and has always worked is that when there is some sort of tax benefit that regular people start to become aware of and use, the government closes it. And so this is just a continuation of that trajectory. Now everybody knows about family trusts. People know about CGT discount. Everyone knows about negative gearing, and every man and his dog can do it. And it's a very common kind of strategy. So obviously you just get closed. That's just how it works. And that's the trend in tax law. And it has been and it will continue to be. When they close these things down, obviously, like everybody knows that, and you said the government's communist, and I think it is communism in its...
I whispered that, Adam. I didn't.
Okay,
say
it was
that
someone said that, but it's communism in its actual form rather than its true form, in the sense that communism in its actual form is a small number of people become wealthy and everyone else becomes poor, and that's the same here. Obviously, this tax doesn't apply to anyone other than ordinary people. If someone with any basic level of sophistication or a wealthy person is probably going to end up better off. So that's just, it goes without saying. Anytime the government makes these changes, it's like it always benefits like the wealthier and more sophisticated class, and this is no exception. So
does that not fly in the face of their remit, which is to help provide prosperity to the country? I mean, effectively they're like middle managers, but their role is to make things better, not worse. In a nutshell.
Yeah, I mean, this is the thing.
Or is that idealistic?
I mean, I've never been able to square this. Like, one thing I've never been able to figure out is whether they do this deliberately because they're evil, or they do it because they're incompetent, and I've never been able to figure that out. But what I do know is every single time they do it, it always benefits, like in actual application. This is for things that I know about. Like there are heaps of laws I don't know about and don't understand. But in my field, whenever the government makes a change in tax law, which is an area that I understand well, it always benefits wealthier people every single time. They always say, "Oh, it's this and that for other people," but it's always the wealthy people end up doing better off from it every single time. And even as I was going through and listening to this budget announcement, I realized that this would be no different. The government introduced some rules previously as well about like the level of advice that accountants can even give their clients, which also disproportionately affects ordinary people, because they want accountants to, try to encourage people to pay a higher level of tax. So they tried to codify that into the rules as well. So they do these types of things, and they say it's for everybody, but it's really only impacts the ordinary person. It's that concept, when you're playing poker, if you don't know who the fish is, it's you. So that's how it is. So I look at these changes and I think, there's going to be no impact. Like if you use a really, really basic example, okay, I'll give a really, really basic example to demonstrate the point. If you have a 30% minimum tax on capital gains, if you're already paying a 30% or higher tax rate, are you affected? Probably you're not really affected. What difference does it make to you? Who cares? But if you're lower than a 30% tax rate, then you have to pay a higher tax. And who has a lower than a 30% tax rate other than people with a lower income? So
So it's a complete attack on the. Are you aware of like the FIRE community?
Yes.
Financial Independence Retire Early community.
Yeah.
So So for anyone not aware, there's this community out there that are intent on becoming financially independent so they can retire early. It's in the name.
Yeah.
So the idea is you make as much money as possible, you make a lot of investments, and you live off those investments sooner than you would otherwise if you retired at 66 or whatever the age is now and start getting your pension and start tipping into your super. But this tax change, as you say, has effectively destroyed that whole mentality, at least in Australia, because you might stop working at 40 and your idea is that you built up tons of capital assets, whether it be businesses, shares, Bitcoin, blah, 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 and you're going to be slowly selling it off. Your employment income is zero, but you're going to be selling off 50K of assets every year. So with a minimum 30% capital gains tax on those sales, your strategy is now you've probably had to add an extra 10 years to your FIRE strategy just off this change alone.
That's right. Unless you bring a little bit of sophistication to it and go, okay, all that's happened here is that the government has changed the trade-offs that are available. So let me throw this one at you. Currently in New South Wales, if you own property through a family trust, discretionary trust, you have to pay land tax. You don't get the land tax threshold. So the first $1 million or so of land value you don't pay land tax on if you have the land tax threshold, which works out to about $17,000 a year. If you own property through a trust, you don't get the land tax threshold, so you end up paying 17 grand a year. Let's say on a $1 million property. If you own that property in your own name, or if you owned it through a company, you wouldn't be paying the land tax. So there's a $17,000 swing when you choose to use a trust for a $1 million roughly property, okay, by using a trust as opposed to using anything that's not a trust. Now, why would you use a trust? The only reason people use a trust is because they think I might get the CGT discount. And so, yes, I'm paying land tax, but I'm going to get the benefit when it comes to selling with a CGT discount. That assumes that it even goes up in value. Now, what's going to happen is say, well, why should I use a trust if I don't get the CGT discount? I'll just use a company instead, say, for example. In that case, state revenue which actually is the one that pays for roads and schools, loses 17 grand a year per investor who would have otherwise used the trust. So the federal government ends up thinking, and the federal government only collects CGT when you sell, right? So the state government, in the meantime, drip, 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 every year loses 17K every single year per investment that would have otherwise been in the trust. Drip, 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 drip every year. And the federal government is only going to get any money back when you sell. And if you use a company, the company tax rate is like 25%, maybe 30%, which is the same tax that you would collect after the CGT discount if you were on the top tax bracket. So the federal government's going to end up with roughly similar amount of money, but they'll have indexation applied. And the last time they applied indexation, and I think because they just don't remember this, I'm old enough to remember indexation. I remember when indexation came out, it was abolished and replaced with the CGT discount. There were some people who were very unhappy about it because they ended up paying more CGT because inflation was so ridiculous that some people got more than a 50% discount if you applied indexation. And they felt ripped off that now they were only going to get a 50% discount when they were expecting to get more than that. And so what will happen is when the person will work out some way, you'll get like some kind of lower amount of CGT or something. It depends on the vehicle that's used. But what's essentially happening here is the overall tax take will reduce. And then the state government's going to say, I don't have enough money, I need to build these roads and stuff. And the federal government's going to go, I don't have any CGT money because people are paying essentially the same rate as before, or maybe not even selling or using some different type of strategy, which results in the tax being even lower. And they're just going to be short of funds. And to me, that's just a very obvious mathematical reality from this. That's just one of many outcomes.
Can I just ask you a clarifying question there, and then maybe we'll zero in on Bitcoin and how Bitcoin holders out there are affected by these new changes as well, specifically. Real dumb question. So you said in there, land tax would go to the state, but CGT gain tax would go to federal government.
That's right.
Is that correct?
That's right.
Okay, and it's pretty obvious that, you know, all taxes are generally bad, but more often than not, taxes that go to your state government will pay for roads and schools, whereas taxes that go to the federal government will pay for globalist propaganda and wars overseas and you know, bombing brown people in the Middle East and that sort of thing. So generally speaking, you'd rather pay your tax to the state, to your local state, rather than the federal government.
I think so, yeah, because it's used on stuff that you use, actually. When you strip it down, because people say your taxes go to roads and all this stuff, and all the stuff they mention is stuff that the state government pays for.
Exactly, yeah. And it's the federal government that is just...
that's all welfare and defense and NDIS.
They take the taxes and give it to demons and summon Moloch and all that sort of horrible shit.
But before we jumped on air, I just wanted to ask Adam, before we jumped on air, you were mentioning you said there was a lot of different... unintended consequences, I suppose, to the new budget and some of these CGT tax laws and stuff. Yeah. If you could outline those, just at least a couple of them that kind of spring to mind, the most obvious. But just within the context of, you mentioned before, like how the state government will now be bereft of that 17K per trustee or whatever it is. Don't the boffins that write these sort of 8 to 1,200 word or rather page tomes every single year, like, don't they think through the order of operations, the kind of the intended consequences, the unintended consequences? I mean, hell, you could use Grok or ChatGPT or Anthropic, Claude, whatever, to kind of just run scenarios for you, right? And you could then push, like, you could cover all of those things that you've just said, and that we're sort of unpacking here, going, hang on a minute, that's not going to work because of these reasons. Or
I mean, that's why I'm never sure if the government is evil or incompetent, because to me these things were obvious, and I'm just a random accountant, you know. So I would assume, but so that's that I've never been able to figure out. But it just happens all the time. It just keeps happening again and again and again and again. even here. I mean, like the other one that will really screw everything up if I extend the previous example further is this. I told you that there's no land tax if you get the land tax threshold if you're a company. You also get one if you're a super fund. So let's say you wanted to be an investor in property. You'd say, well, if I'm old enough and I might just use my super to do it. Because if you use your super to do it, you might be in a situation where, okay, there's no land tax along the way, okay, and then when you're in pension phase in the super fund, so you reach 65, you can sell the asset without paying CGT. So then there's no tax. You end up like there's no tax revenue for anybody. And they're going to obviously incentivize that particular type of structure, because who's going to pay a higher tax rate when you've got another structure where you would pay a lot less if it's a longer term investment? So I think so the nature of the trade-offs changes. Someone might have used a trust before, maybe because like that's a fairly standardized product, or maybe because they had like a different strategy in mind. But for certain types of people, they'd say, well, the trade-offs have totally changed. I use this other strategy instead. And you can negative gear if you can, in a roundabout way, it's not direct, but in an indirect way, you'd negative gear through the super fund too. So the negative gearing is still available. So you can buy your investment property, you can negative gear, you can get your loan, pay no CGT, pay no land tax. It's great.
So to bring it back to Bitcoin there with the SMSFs, so are you saying that with these new changes, it becomes much more sensible to go down that SMSF route and stack Bitcoin in your SMSF so that if you sell it during retirement, you're getting it tax-free then?
Bitcoin has that. Yes, there is something that is one thing that's available, but Bitcoin has another advantage, which is a very significant advantage, which property doesn't have, and that is that with the property you can't really like sell tiny bits of it here and there. It's not easy to move. Every time you do something, you have to pay stamp duty and all that. With Bitcoin, you can trade it a lot more easily. You can sell part of it, you can sell more of it, you can transfer ownership, you can do all sorts of things. And also the tax law assumes Bitcoin is sort of more of an investment as opposed to something that's being used, which is different to its actual reality, which gives it a lot of space. Because it doesn't have a home in the tax law, you end up being able to use the tax law as applies to all sorts of different types of things, all sorts of different types of assets, because it can belong to any of those categories, which means that if there was, for example, a concession of some kind available for property, like the super one that applies to that asset, it can apply to Bitcoin too. You made a good point. If you stacked in a super fund and then you reach 65 under the current rules, you'd sell, you'd pay no CGT, and you'd be able to pull it out in pension phase. That's true. That's something that's available, and it's something that's easy to do. But equally, like even in a business context and even in a personal context and how you hold, like it gives you so many options because it's divisible, and because it's able to be easily moved, like it's functional in that sense. So you can do a lot more things. Like if I bought shares in BHP, for example, that's also divisible, but it's not like I can easily I could have 100 BHP shares. I can't easily go, oh, do you want to have 5 of them, and keep 95. I mean, I could do that, but it's not easy. You'd have to like do a transfer form and do all this stuff, go through a broker, maybe pay a fee. It's complicated. With Bitcoin, you could easily say, I have, 100 SAS, I'll give someone 5. Like that's easy. And so
Okay.
it creates like, way more possibilities because of that. And so each person, when they're thinking about their strategy, would have regard to like what their personal situation is. So like if you said, I'm someone who just wants to stack, if like there are people who say, look, I just want to stack as much Bitcoin as I want, and I'm never going to ever I'm never going to sell. I just want my kids to inherit it. for a person like that, like even owning it in your own name doesn't matter because you're not going to sell, you're not going to pay tax anyway. When currently there's no tax on inheritance, so you'd be able to.
But am I right in thinking with inheritance, if I have some Bitcoin now,
Yeah,
I'm stacking it now in an inheritance account for my kids, and I pass it to them. Let's say I want them to take advantage of it earlier. Let's say I turn 60, and I want to give them their Bitcoin that I don't want to sell, and I hope they don't sell it, but I'm going to let them inherit it early when I turn 60. Am I right in thinking that that still counts as a disposal for me, and I'm going to get smashed by these new rules which say, okay, calculate your capital gain at the disposal of the gift or the inheritance to the kids? I'm going to get smashed by these new rules. Maybe I'm still working when I'm 60. I'm going to pay the indexation plus 30% minimum on top of my regular income just to get that Bitcoin in their hands.
well, I mean, the inheritance is you have to die first before you can pass it on to your kids. You wouldn't still be alive.
But in the case of a gift, if I just gift it to them.
Gift. With a gift, you have to pay tax.
Yeah. So it's a disposal tax. So I get wrecked by this new change. So maybe I'm keen to just ask you.
Not necessarily, but it is
Okay.
It is possible. I mean, like that's why you got to look at it. You got to look at it in terms of, like the specific function of the situation. So you're saying, okay, I want to be in a situation where I can give my children some Bitcoin, and not have to get smashed with this tax. That's a different question because essentially, really, what you're saying there is not really, can I give them Bitcoin? You're really saying, can I give them, like give them Bitcoin like on its own? You're really trying to go. The question you're asking is, what mechanism would be available for me to share the benefit of the part of the Bitcoin that I have with my child? When you phrase a question that way, like it opens up a lot more options than just saying, I want to do this very specific transaction.
Right.
Because then you've got more ways of doing it. And so you could explore those different paths when you're planning ahead.
Sure. Because but we've had a conversation before where it's really about the story you can tell that kind of frames up what you're doing, rather than just reducing it to some basic transactions, which the ATO will look at that and be like, okay, well, based on this transaction, you pay this much tax.
Yeah.
But if you can wrap it up in this story about, it's beyond just a transaction.
It needs to make sense as
it
needs to make sense as a holistic thing. Like you got to look at your life holistically, right? As opposed to one transaction. Like a lot of people in tax, the mistake they make is they look at only one segment as opposed to the entire chain. And so like, I've seen people, for example, go, oh yeah, if you do this transaction, you don't pay any tax for that leg of the transaction. And that's fantastic for that one leg. There might be like 4 legs. And so you worked out that there's some sort of exemption or rollover or something available for one of those 4 legs. That's great. But what about the other 3 legs? Sometimes like there's a huge tax in one of the other legs. So you got to look at it for the entire chain when you're thinking about these things. Like someone might say, for example, okay, with CGT, why don't you just use a company now? Because a company tax rate is 25% or 30%, and they'll just use that simple straight line. And that sounds very appealing. But then you have to think about, well, what if I want to get money out of the company? What do I do then? Like, do I have to pay extra tax from that leg? Or like, what's the right thing for me? Or you could say to someone, look, just stack in super. And they go, that's great. And they do it. But then they're like, they haven't reached retirement age. They're not 65 yet. And they say,
but after you reach retirement age, you can.
Then you can.
Can you freely gift stuff like Bitcoin tax free?
Well, not in a direct way. But what would happen there is you'd be able to sell the Bitcoin in the super without paying tax, pull it out as a pension, which is also tax free, and then give your children some money, and then they can buy their own Bitcoin, which they could buy at the cost base of at that time. So you're not giving them that Bitcoin.
So it's about resetting the cost base.
Well, that's the effect of what ends up happening. But what I'm trying to say, that's why I was saying the question you have to ask is, you're trying to give your children the benefit of the Bitcoin rather than that specific Bitcoin. You can't sell them the Bitcoin or give them the Bitcoin that's in the super fund, to your children. You can't do that directly because the rules don't let you do that.
Yeah, okay. Can we pivot? I want to ask you about something a bit more practical, just in the light of these changes.
Yeah.
So, as we sort of mentioned earlier, the change that's coming down the line is from 2027, July 1st, 2027, replacing the CGT discount, 50% discount with indexation, 30% minimum tax rate. So, what would you say for Bitcoiners out there that are listening, that have been stacking Bitcoin for 5 years, 10 years? They were thinking about selling some to enjoy some profits. And hopefully this bear market ends in October, November, maybe if the 4-year cycle proves true. And, March, April, May next year, we're actually back in a bull market. Prices are back up. They're well over 100K. They're back in that range where they're like, yeah, I'm thinking about selling maybe half my stack. Do you have any advice around these new rules? Like, would you be advising, like, people that just want to enjoy it now, they just want to take some profits and enjoy it now. They're not thinking SMSFs, they're not thinking retirement, they're not thinking inheritance. They're just thinking enjoy profits now or at some point in the next 3 years. Based on these new rules, would you advise people start to think about taking that before that July 1st cutoff, or maybe sometime after? Maybe something will change at the last minute, the rules will change. What are you sort of thinking in that regard?
I always ask people what they want to spend the money on first, because that determines
Lamborghini.
A Lamborghini, okay. Well, and that's a purely personal spend on that Lamborghini. Is it because that type of thing is relevant? Because sometimes people want to use the money for an investment. That's different to if you wanted to use the money for a personal spend or a holiday, which is different.
I mean, I honestly say, like, the only good reason to spend Bitcoin is if you did want to actually start a business. Yeah. And again, there's a ton of caveats with starting business. Obviously, it's a nightmare out there, especially with all the regulations and stuff. But that's like one of the only real good reasons I can think of right now to actually sell some Bitcoin is to potentially start a business. So let's say it's that. Let's say someone is thinking of selling 50K of Bitcoin to quit their job and start a business and use that as their startup capital. But the point is they want to make a sale and they're looking at timing it around. They're wondering what the heck to do with these new rules coming down.
Well, I mean, the rule, if they're starting a business, the rules will have no effect on them whatsoever. So that it won't matter. Like, then they don't have to worry about that.
Is that just because the cost of starting that business is then offset of their tax, and so that wipes away the CGT tax anyway?
It could potentially. That's right. Like, yeah. I mean, it depends on how you do it, because you can do it in a way where it doesn't do that, and you can do it in a way where it does do that. So, but that would fundamentally be like that concept is there, right? Well, that means whatever the government's doing with the rules, it doesn't really matter, because that's there now and it will be there after the rules change too. So that person who's doing that would be completely unaffected.
Okay, but what if I did just want to enjoy the profits for personal use, whatever crap I want to buy? What am I thinking?
Okay, so the personal use, you probably already are thinking, well, if you were already expected to pay CGT anyway, that bit's a lock. The thing that you have is, like, where you have variability is this, like, if the formula is that you have to sell your Bitcoin in order to pay tax, then you know that, like, you trigger the tax at the point of sale. And so obviously you have control of that. And that's obviously a function of when you need the money. If you really wanted to you could say, look, because the way when the rules come in, they will take the market value at I think on the 1st of July 2027 or maybe 30 June, but one of those 2 days, they'll take the market value of your Bitcoin and they'll make that your cost base. Okay, and then after that, you'll get indexation from that point forward. Depending on what you do, I mean, you could always, and you'll get CGT discount up until that particular price. Once you know that that's the case, assuming that they keep it that way, you have a lot of options available to you in terms of what happens going forward, because you're starting to talk about, okay, like how much is the price going to move from that particular point? Like, how much time do I have? Because unless the price spikes all of a sudden, you probably are still going to have the benefit of the CGT discount for the whole thing for a little bit of time. But also, like, if you were so inclined, you could you could say, okay, this might be an opportunity for me to restructure in a particular way, where I change my structure and maybe try to roll over some of the gain or something like that, so I don't pay CGT on it now or something like that, and see if there's some sort of deferral mechanism or election available in the tax law, because there are for like various different things. And there's because within the tax law, they have quite a few concessions for different types of scenarios. And so what you'd be doing is saying, well, like, and these are government. The government is obviously like has these incentives and concessions there for a reason. It's to encourage people to either do something or be able to do something. That's why they have them there. And so you'd say, well, I mean, I think a very basic exercise would be to go through them and see if any of them are available. Because if they are, then obviously you'd use them. Many people don't know about like the different things that are available. I'll give a really basic example. Using your thing about someone who wanted to start a business. If you're doing, say, for example, research and development work, okay, like trying to invent something new. So say you wanted to put $50,000 into inventing something new. You could do that in your own name, and then you might be making a loss, and you just leave the loss there and do nothing about it. In the alternate, if you used a company instead, you're able to get the R&D tax incentive, which might give you a tax refund based on a proportion of your spend. So just the choice of choosing between doing it in your own name and using a company, one option gives you nothing and the other one gives you access to a tax incentive. Sure. So within the tax law, there are heaps of these. There's like, and it's publicly available, but there's heaps of these, and you can just go through and go, well, this is what I want to do. I wonder if there's some sort of incentive available for that. And I think at a very minimum, you should do that, because that's why it's there. It's there to, they do it to encourage people. They're doing one now with the new builds. They're saying, okay, if you buy a new house instead, you can still use negative gearing, because clearly they're creating an incentive for that type of investment. So the tax law just has heaps and heaps of these in there for different government policies and priorities over time.
Sure.
But it's
just to roll back something and just clarify something, just again for my grug brain.
Yep.
At 1st of July 2027. So you mentioned, so we have the flip from the CGT discount to the indexation.
Yeah.
If at that time I have one Bitcoin, I've got one Bitcoin, it's in my personal name, it's not SMSF, no funny business, it's just personal stack Bitcoin, one Bitcoin. You're saying that from that date onwards, it is still, that one Bitcoin is still treated as receiving the 50% CGT discount as long as it's over 1 year old. If I add to that stack, anything I add to that stack from that date onwards, that is just subject to the indexation. But that one Bitcoin always, forever, until I dispose of it, that one Bitcoin will always receive the 50% discount? Or is there like a transition where suddenly that asset, even though I've held it for 5 years, flips to
the way the rules are
indexation.
written is it always receives a 50% discount up to the market value on the 1st of July 2027. So let's say you bought it for 20k and it was 100k on that date, you'd get the CGT discount for 100 minus 20, but anything above that would be indexation. And you wouldn't get the CGT discount, is how they've designed it. That's if you choose to go through that particular path. But yes, so there is a lot of variability. But like I mentioned, it changes the trade-offs within the tax law too, because the tax law, for example, was saying previously, why don't you invest in something as a capital asset, as a growth asset, and if it goes well, we'll only tax you half on the gains, but if it goes bad, you quarantine your loss, and you get to choose whether you want that particular thing. And most people are bullish, that's why they're investing in it, so they'll take that option. Now what it's saying is, okay, if you do take the capital investment route, you're going to be taxed on the gain in full, except you'll get some indexation, and if you get a loss, you'll be quarantined. And if you don't use that route but use a different route, you'll be taxed at the same rate on the gain, except you won't get the indexation, and the loss won't be quarantined. It changes the incentives of which one you might pick, because you might be going, well, the indexation's not really worth that much to me, or maybe it is worth a lot to me, and so you'll choose accordingly. But it's changed the value of the trade-offs. Like I used that example with the trusts and the land tax. Someone might say, well, I was previously willing to pay land tax and in exchange get this CGT discount. Now I don't have a CGT discount. Why am I going to be paying land tax? It changes the trade-off. So all it does is it redesigns like what the good options are. Like certain things become a better option and other things become a worse option, and all the benefits that are associated with the options flow. So every option has its benefits and it has its detriments. And so, when you choose a different option, that different option will have different benefits and different costs that flow with it. And obviously you'll have to accept all of that. So it will just change. All it does is it changes the incentive structure.
There are no solutions,
but it's still ultimately
trade-offs.
It's like a cat and mouse game, though, right? Like as you've said, the government's always changing these rules, and they tend towards making it harder for the little guy to get ahead. And so even though you might set a strategy based on these new rules coming through, it might only last you 4 or 5 years before they change it again and close whatever strategy you took.
It's true, because this is the problem for the regular person. The government will say, look, it's fair because the tax legislation is there for everyone to read, but it's like thousands of pages, so who's going to read it realistically? And so what a regular person relies on is that they'll be dealing with somebody who's read all of it, or maybe read some of it, or at least been in touch with someone who's read all of it or something, and can offer some stock standard ideas that they can use, because they're not going to read the whole thing themselves. And so those stock standard ideas don't work anymore because the underpinnings of those stock standard ideas have now changed. Remember, all the trade-offs have changed. Okay. So the people who are relying on, who don't have the time to read through the entire legislation, okay, and who are relying on someone who might not be charging very much money to give them some kind of summary, they have to wait for that person to themselves learn, like, from someone else and so on, for it to trickle down, so to speak, before they can start to see, okay, this is what options are available to me now. The people who use someone who's a bit more expensive, who's read everything, they've already read it and they can go, oh yeah, I know that there are all these other incentives now, and now this other one is better than this one from before, so maybe you could use that. So that's another problem. That's why I say that the rules changes hurt the ordinary person. They'll be paying more, and the people who are wealthier or more sophisticated won't, because they'll just switch to a different incentive,
Right.
because like one that's probably lesser known, but nonetheless is in the legislation. Legislation, there's so many of these. It's like thousands of pages if you read it. There's like a chapter on rollovers.
I was going to say, Adam, like this, I'm actually surprising myself right here, just how fascinating this conversation is. And I'm mindful of time, and there is so much to say and so many questions to ask. And we could probably do this for a lot longer. But one of the things that you've given me an idea, like, do you have any plans to release a local LLM model under the Adam and Ahmed and Co. brand? You could download onto your local device and it could be loaded up with all of these questions or information rather than you could then ask it questions, because the shifting sands, like it's like if they just change the rules of the footy game halfway through and everyone's got to all of a sudden scramble and figure out what the new rules are in order to try and win the game again. And if your time and resource constrained, well, clearly you're not going to, but the LLMs kind of can flatten that asymmetry a little bit, which is cool. So I don't know if that was more of a joke, but if you ever release a local accounting model, I'll download it and I'll ask it questions. I think that'd be very helpful.
I actually haven't heard of an LLM before. Maybe I'm old, but I didn't know what that was.
That's your ChatGPT or your Gemini or whatever thing you're using. So you could do like a flavor of that, which is focused on Australian tax law.
Okay.
LLM.
I didn't know how it even built that.
The idea is that someone can come with their specific scenario and plug things in and be like, what should I do?
If I could build that would be great. I mean, but ChatGPT comes up with some pretty wild stuff. Like people come to me and say, I've already got this advice and someone's recommended this structure, and it's like from ChatGPT, but they don't admit it. And
I wanted to ask,
and it doesn't make any sense. It was so complicated. I'm like, wow, this is a jumble, but that's clearly not going to work. But it's like, it's.
I feel like there's enormous product market fit. If you came across with something like that, you would. I mean, you could make a subscription. I don't know. Anyway, I know some people that could help you.
Oh, look, I'd love to
develop that.
I'd love to talk to them. Can I
just ask one last thing of Adam, just for like your general sort of like 1,000-meter view on the changes? Because I generally look at it and it all sucks. It's very communist. It's terrible. But what I don't think people have really recognized is the main damage that these changes will do is just the destruction to, like we mentioned, starting businesses before. We are effectively removing that carrot that people chase when they go to start a business, do a startup or whatever. People have been joking and they've put, they've photoshopped Albanese into their startup, as a co-founder who's taking 50% cut at the end. Is it really like as bad as I think it is that we are just it's destroying our economic incentives in Australia to just build businesses, which are the economic engine of the nation, which is what is creating like everything good in our nation is entrepreneurs, business owners going out there and producing goods and services that we enjoy. If you're removing the incentive to do that through this budget, through this quite simple, straightforward change, like, is it really as bad as I think it is? It's going to destroy our economy.
I don't think this budget will change that, but I think that what you've identified has always been there, but people don't realize it. Like I give a very simple example. Like if I said to you, like Mike, let's say you said, I want to make 100 grand. Like I want $100,000. Okay. And you told me you wanted to have $100,000, say by the end of next year, say, which is a year and a half away. Okay. What a normal person initially thinks with that is they go, I'll just earn $100,000 flat. Okay. What's really happening here though is you're thinking, I want 100,000 in a year and a half because I want to buy this particular thing which costs $100,000. That's actually what's happening. Now, if you change the equation and say, okay, that's a different question, because to do that you need to make maybe $300,000 over this period of time, because say half of it goes in taxes, which has already been there. Then you have the inflation and all this other stuff that you've got to take into account. Then you've got like other incidental random expenses that might come up while you're trying to do that and other admin. And so in order to make $100,000, have the $100,000 in a year and a half, you need to make $300,000 in that 1.5 year period. That's always been there. What happens is people feel like they're not getting ahead because they don't realize that that's actually the equation. What they do is they think, okay, I'll make 100 grand. They have $100,000 in the bank. They're like, oh, this thing's gone up in price. I can't buy it now. So I feel like I'm getting behind. Then they get their tax bill and they're like, half of it's gone. I've got 50 grand. The thing I want to buy now costs 150. What was the point, of all this effort?
Made no progress.
I've made no progress. I'm going backwards.
So I've made no progress. So why don't I just go sit on settling?
That's right, because that equation has always been there. Because if everyone who runs a business, you set up a business tomorrow, you work for free for the government as a tax collector, reporting data to them. Fair Work, if Fair Work's there, ask you to do all this stuff. You've got iCare, you've got all this regulation. So the government just comes in and says, oh, great, you want to run a business? They assume, they say this thing where they say, okay, we set the law so it's the same for everyone. And that's a great principle. I love that principle. Sounds fantastic. But what it means in practice is they go, oh, we want to be able to regulate Jeff Bezos in a particular way, but we have to make the law the same for everyone. So why don't we regulate everyone like Jeff Bezos, right? So you start your business and they swarm in with all this admin and all these requirements because you're treated like Jeff Bezos, right? And so
but then Jeff Bezos can pay for his army of lawyers and accountants, Joe Smith down the street with his little tuck shop can't.
That's right.
That's why we need LLMs, man. I'm telling you, we got to flatten this asymmetry. I have a super random question, and I just wonder if this is something for the future, particularly in light of my LLM dream. Is it possible for let's just say hypothetically HardBlock to adopt the Nike tax minimization strategy, in which they have like a subsidiary company in a low or no tax place, like, I don't know, Cayman Islands or something, and then those subsidiaries own the rights to the swoosh logo. And then Nike, the operating company that actually sells shoes in the US or Europe or Australia or whatever, they have to pay royalties to use that logo. This then moves profits out of the high tax countries like Australia and into places where there's little or no tax paid. Could we scale that down to the local mum and dad fish and chip shop?
Well, actually, the first thing I would comment on with that is, like, that's an idea that was around from a long time ago, so they've already worked out how to fix that one. There's a withholding tax. There's a withholding tax on royalties, and it's usually 30%, which might be higher than the basic rate tax that the company might otherwise pay in Australia.
So they
25.
are evil. They're not incompetent.
So you'd have that particular issue, and then they also have transfer pricing and some other things. It would depend on when you have an international operation. It actually depends on how much stuff is being done in another country, and it depends on what that country is, because there is a principle that if you have like a base in another country, like so you're an Australian company, you have a base in another country, and that is like, especially if it's a country Australia has a tax treaty with, then you actually don't pay, the income generated from that base is exempt from taxation in Australia. There is a principle. It's in 23AH in the tax legislation. So then you instead of doing a complex thing with royalties, you would just do something like that, because then but you need a base of operations there, and it only applies to the income that is attributable to that base. But what happens is, and this is interesting because it depends on the country, because there's a treaty involved. A treaty is actually there for the division of tax revenue between two countries, between Australia and that other country. So you actually end up having this natural balancing effect, because the other country wants to, like, they might have a lower tax rate or higher, it could be anything, it doesn't matter what their rate is, but they want to protect their turf. And so the Australian government might be like, oh, the foreign operation is a lot smaller than you say it is, but the foreign country will be like, no, the foreign operation is bigger. So it creates a natural balance. And if the two countries disagree, then they have to duke it out amongst themselves and then just tell you what the answer is. So you can just sit there and say, yeah, like you guys sort it out and then tell me. I mean, knowing that, like, you're probably going to be okay because they're both going to try to like maximize their position and come to some reasonable position, but you don't have to waste money on that because they're doing it for you. So you can, like, when it comes to the international context, like there is, like, it's a different layer of, how things work because now you're going in government to government situation. It's not like government to small guy. So that balancing creates a different situation.
Sorry, Mike. I just had one last question. I mean, to be honest, I could talk to you for hours. I'm curious to know a bunch of different things, particularly like, do you subscribe to Keynesianism? Being a Bitcoin, I presume you don't. But just for the benefit of the audience and for my own mind as well, looking ahead, say 5-10 years time, what do you think is the single biggest tax trap that Bitcoiners, Australian Bitcoiners, might likely fall into post these new tax changes proposed, because they're not actually in law yet, in 2027? And what's a proactive step that you would recommend to take?
Yeah, the biggest trap I see is this, because the Australian government, the tax office is particularly vicious on this, is like someone who goes, you know what, the tax office won't know I've got this. And then they try to hide it in some way. Because when you do that, what the tax office does is they come in, like, people think the tax office has to work out, like, with data what their tax should be. And they go, well, they can't work it out. They can't do anything to me. But it's actually the reverse. What happens is the tax office can just guess. And when they guess, that's by law evidence that you owe the money. Like, if they decided that, they said, like, if someone in the tax office decided, Daniel, that you owe $1 billion to the ATO, you owe $1 billion. And they can go to court and they can bankrupt you, and you can't say, I don't owe 1 billion. All they have to do is show the sheet of paper that says you owe 1 billion, and the court will be like, that's proof enough for me. Bang, you're done. So that's so what they do is, it's a guilty unless proven innocent system. You have to go through a particular process to get that unwound. It doesn't affect their ability to block you from leaving the country, taking your assets, bankrupting you, and doing all that stuff in the meantime. And you have to go through this particular channel. You're relying on their goodwill not to do those bad things to you while you're going through that channel, to then sort it out. And in that channel, you have to go to them and say, here's how much I really owe, and here's the proof. And they look at your proof and they go, I don't think you've got enough proof here, or I think there's still holes here. And they can choose whether to accept it or not accept it, And
why didn't they do this to Christopher Skase?
They probably did do this to him, but he was in a different country. So they could block you from leaving the country if you're already in another country. Like, how did they get you to come back? But they become more aggressive. So what happens is this. Once they do that, they'll go, okay, here's a person who somehow bought something expensive. They either don't lodge tax returns, or based on their tax return, their income is low. There's no way they could have bought this thing, right? Because they get all your data. They get everything you own. They know everything. Like, they have your bank account details, the interest, shares, everything from an exchange, cars, property, everything, right? They've got all of that. And so they'll go, how is it possible that this person has bought this thing? There's no way. I'm going to guess that they made this much money, okay? And then the person's going to say, oh, I had some Bitcoin. Oh, really? Like, and they'll say, yeah, I sold a Bitcoin. Sorry, I sold one Bitcoin. I bought it in 2013 or something. I'll pay my tax on it. The tax office will say, how do I know you only have one? What if you have 5 or 10 or 15? And the person's like, no, I've only got one. And the tax office will say, you know what? I reckon you have 30. So I'm going to give you a bill accordingly. And because I reckon you sold more than that, and the person might actually not even have 30. They might literally only have one, but that's it. Like they have to prove that they don't have 30, as opposed to proving that they only have one. So yeah, because you have to prove the negative.
That seems to go against the Magna Carta and like basically any kind of law throughout history, right?
It's how the tax law works. And it's
so you
insane.
have to be under the assumption that they basically know everything.
They do, and then what happens is, after that process, they'll go, okay, I'm going to tax you, and you'll be taxed at the highest rate. So maybe say call it half. They'll chuck a penalty on there as well, which is the maximum penalty will be 75% of the tax bill plus another 20% on top of that because they have this extra uplift they do, and then they'll charge you interest. And you'll end up paying tax on an amount that is, your tax bill will be more than the gross revenue from that Bitcoin sale. You sold a Bitcoin for, say, $500,000 or something. Your tax will be like $550,000 or something. And they'll chase you hard to collect it as well. So that's the worry that I see, that people don't realize that they do that. And when you go to court, the courts don't always often do something. I had a matter in the tribunal where the judge there said, to the tax office, you've charged these people $1 million in tax. This is on appeal at the moment, so see how it goes. But in the tribunal, he says, but there's no way that these guys owe $1 million. He said that to the tax office directly. In fact, the tax office had documentation saying that they thought it wasn't $1 million, it was only $500,000. Okay. And that was before the tribunal in evidence. But the tax office argued to the tribunal member, look, you don't have the power to change this. And the tribunal member got scared and was like, oh, maybe I shouldn't change it because I don't have the power to do it. And asked the tax office, can you change it? The tax office said, I'm not doing anything. You have to do it, but you can't do it. And the guy just froze and just was like, yeah, I know I've said that it can't be $1 million, but I'm just going to have to leave the bill as $1 million.
Wow.
And then I was sitting there thinking, like, you get paid by the taxpayer to sit there doing nothing. Like, if you can't do anything, like, why are you here? Like, our tax money is going into this environment where you are literally like not able to do anything. So if you think you can't do anything, you should resign. Like, let someone who can do something work here instead. That's what I was thinking. Because the guy is on a pretty good wicket. Those guys get paid like $300,000 a year to sit there.
Yeah, if he taxpayer funded.
Yeah, if he believes that he can't do anything.
It sounds like the only solution is destroy the system.
Yeah.
And that's the only thing you can come to. You can only come to the conclusion that these rules are evil. The money is being misused. It's being used for war and other horrific stuff. It's not being, maybe 10% is used for actual goodness in the world. So your only option is destroy the system. Like that's all you get. That's what people are going to start to come to that conclusion. Hopefully sooner rather than later. I got one last question. And then maybe we'll wrap it up then. What would you say to someone who's looking at these rule changes? They're looking at the bear market. They're wondering what the hell they should do. They just want to stack Bitcoin. They just want to save in Bitcoin. Hopefully the bear market ends and Bitcoin goes up in value. But I just want to stack personally. Is there anything that you should be doing now in preparation for this? Should you be talking to an accountant? Should you be setting up a trust? Should you be setting up an SMSF? Or should you just humbly stack with your DCA and pay the bloody tax bill when it comes?
I think you have to plan in advance because, like I gave you that example before, if you wanted $100,000, in 18 months' time, like you need to make 300,000. You got to really plan these things in advance so that you don't end up, instead of having to make 300,000, you have to make 400,000. Like people just go, I'll just pay the extra tax and all that kind of stuff, which is fine, and you have the right to do so, and there's nothing wrong with doing that. But you have to map these things out with the end in mind, because if you don't map it out with the end in mind, you always end up paying extra. And that's not just for tax, that's for anything, right? Like if I want to, like, I don't know, even go grocery shopping or something, and I just buy whatever from the supermarket, come home, and then I'm like, oh, I don't feel like eating that. I should have eaten something else. I might end up throwing something away because it'll get spoiled. I just wasted money on that. It's just a principle of life that if you go, okay, well, I know that I want to go home and I want to eat this and I'm going to cook this, so I need these specific ingredients, but I also know that this store is the best store to get it from because it has the best price and the best quality. Obviously, if you have that attitude, you're going to end up better off. And you might think, well, oh, that's just one meal. But if you expand that to a year or a whole lifetime, that will make a really big difference. So I think the attitude of planning in advance, even if you're going to be paying even planning in advance for a coming tax bill is important too, because sometimes people don't plan in advance of these bills and then all of a sudden they get crunched and then it puts them under a lot of pressure. The government did this change recently. So the interest rate that you pay on overdue tax bills is pretty high. It's like 10% or something. When they first introduced that ridiculously high rate, they said, don't worry about it. You can get a tax deduction for it. So it's not really 10%. It's like really half that. People were like, okay, whatever. But from 1 July of last year, they removed the tax deduction. So they let it stay like that for quite a number of years. And then they've quietly removed the tax deduction. So now you're paying 10% in post-tax, which is like basically like 20%. So if you're going to be paying like essentially like to pay the 10% interest, you have to make 20% basically, essentially. It's very, it's going to be very onerous. So you can't put yourself in that type of situation. So that's why I think, you've got to, like even the person using that example, like you really need to think, okay, what do I want to do and where do I want to be? And like, what are the options that are available,
Right. So you almost want to start and work backwards, start from where you want to be in 5, 10, 15, 20, 30 years from a financial position perspective. Think about your family, think about your businesses, think about your retirement, work backwards from there.
Yeah.
Go and do your research, go talk to an LLM and maybe sit down with a professional like yourself and actually map out and tease out some of these loopholes. Well, not loopholes, but incentives that are out there.
Yeah. And the thing is that people say loophole, but it's an incentive that's available for everybody. It just seems like a loophole because like people are like, who's going to read these thousands of pages to find them? But they're all there,
My clanker will. And that's why we need that LLM.
and my strategy is keep stacking and humbly wait for the collapse of the system. And I'll come out the other end with my Bitcoin.
Hey, Adam, honestly, you've been so generous with your time and answering all of our dumb questions, or I'll speak for myself. Mike's were a little bit more intelligent than mine. Just for anyone that is listening, Adam has a website, adamahmed.com.au. If you chuck that into DuckDuckGo, you'll find it. I think you're on Twitter, but you haven't posted in a little while. So that's okay. We'll let you off. But you're quite knowledgeable, obviously, in and around tax law, accounting, and also Bitcoin. You're a Bitcoiner. You've spoken at Bush Bash before. And you're a wealth of knowledge, and I would commend anybody listening that is looking for information, looking for insight, looking for advice with respect to all of these sorts of things that we've been discussing, is to go on to adamahmed.com.au and check it out, because I mean, as we've just seen over the last 90 minutes or so, incredibly helpful. So thanks, mate.
Well, thank you for having me. It's been a pleasure, and also thank you very much for your kind words. It's very generous of you.
Thanks, Adam.